Okie dokie.
All right.
Hi everyone again. Thanks for joining us over your lunch break. For those of you that don't know us, I'm Rhea Barrow, broker and owner of Realty in the Twin Cities.
And Ben Musselman, loan officer here at Fairway Mortgage on Eden Prairie.
So today we're going to talk about investment properties, something that I think more and more I hear people are interested in. Real estate is historically one of the best investments you can make. I think it's safe to say if you looked at any wealthy person's portfolio, they would have some real estate in that.
Typically,
So, but all that to be said, it's still something that you can do even if you're not the wealthiest of people, and just kind of build your wealth and grow your investments. So, and the Twin Cities too. I mean, I've been telling my friends for years that like people are finding out about us. Of like the infrastructure we have, the politics, the people, obviously our community, and you know, values are just going up. I've helped more people move from out of state in the last 3 years than, you know, any other year in the last 11 years I've been doing this. Yeah.
Oh, see, I didn't know that for all the years we've known each other. Okay. All right.
Yeah, California, Texas, Arizona, but just a mix. But, and mostly it's for the reasons that they visited, and they like the bike paths, they like the parks. Obviously, we have an amazing airport.
And hopefully they visited in February to see what it's like at this time of year as well.
Well, I always prepare them that it's not just the summer. Summer's amazing, but you know, some people like winter weather.
100%. And you know, aren't we like the most Fortune 500 companies based out of the Twin Cities than any other city thing in the country? So
so
lots of places.
So jobs too, obviously, for people here. But then, what else was I thinking of with that? Fortune 500 companies.
Sorry, I threw you off.
No.
You had a good string.
No, it lost me. But I was just saying to people like, you know, my friends and family that live here, like invest now if you can.
100%.
Even just for a few years, sell it. And we'll just talk a little bit about the basics of what to look for, what it means for financing, and that type of thing. So, I mean, first things first, obviously, you have to decide that you're interested in putting some of your money towards an investment property. And you would talk to a wonderful realtor who will send you to a wonderful loan officer. And so Ben can talk more about what you need, you know, in order to get the process started.
So there's a couple different main types of mortgages out there when you're buying an investment property, but they're all pretty similar. Big things we look for investment property versus a primary residence. Typically looking at a much larger down payment requirement. That 20% required down payment is pretty much for investment properties. You do typically need to put 20% or larger down payment, and you got to show a little bit better credit, because they're a lot riskier product for foreclosures. Because if you think about it, if you lost your job and then you had the investment property and your primary residence, which one would you stop making a payment on first? The investment property. So they're a little bit higher foreclosure risk. So we do look at usually 700 credit is typically the standard minimum for a investment property. But main differences are really just the down payment and just having a little bit higher credit requirements. There's a lot more flexible mortgage options out there where we're going to look at more of the income coming from the renters or potential renters. So kind of the cool part, that's going to offset a big chunk of that payment as well. So,
So obviously, you know, make sure you're in a good spot to be able to do that. And I always tell people, you know, you don't want to put all your money, even same with primary residence, towards it. You want to make sure you have some, because there's another property that you have to maintain too. So keeping that in mind.
Furnace goes out, can be expensive.
And then if it goes out at your other house,
it's twice as expensive.
But that's part of evaluating properties too. So anyone that's looking for an investment property, you know, there's all different types. You can look at a single family home, multifamily, so 1 or 2 to 4 units, like a duplex, triplex, fourplex. Obviously with those, you can get, you know, more rent from different sources, but not necessarily more profit, I would say.
Yep.
Because it all depends.
And on the lending side, I should put an asterisk on what I just said. If you are owner occupying, which means if you're buying a duplex, triplex, quadplex, and you are going to live in one of the units, changes things a little bit. So you can do a lower down payment, don't have to have the same requirement for your credit.
Mm-hmm. It would be like a primary.
Yeah, that'd be more like
3%, 3.5%.
3 to 5, depending on the mortgage product. Yep,
Mm-hmm.
3.5 to 5. So is usually what we look for duplexes, triplexes, quadplexes. But the cool thing about them too is you still use the renter income to offset part of your mortgage payment.
Mm-hmm. So you could qualify for more than
Yep.
what you might.
Yep.
So,
100%.
Things to keep in mind, that's something that I wanted to do. The first property I bought was to get a duplex and live in one, rent out the other.
Yep.
And then a single family home that my aunt had. She wanted to sell it, and I loved that home. So I was like, actually, I'll buy this because I think it'll make a great rental down the line too. And I'll talk more about that later and how that all worked out. But in terms of looking for a property for your investment, you know, evaluating the property as a whole, definitely get a home inspection like I always recommend, even on, you know, your primary residence.
Mm-hmm.
But then keeping in mind too, the inspection is probably going to be a little bit more because in some cases, especially with the multifamily, you might have 2 of everything that you're having them look over. So water heaters, furnace, and with that too, you want to make sure you have money to maintain those things. So thinking about how old are those and when am I going to maybe need to replace them, and keeping that in mind for your budget. And then as part of evaluating the property too, and this would be before you even put an offer in on it, is looking at what rent is going for in that area. If you can get a rental license, because you know, Columbia Heights for a while had a moratorium, Maple Grove had a moratorium for a while where you couldn't get a new rental license.
Oh, really?
Yeah.
See, I didn't know that. Okay, wow.
So that's what you also want to be keeping. You know, and I offer you don't want to buy a house and find out you can't rent it.
Well, and we would look at that on the financing side. If you're getting financing, that would be something that we would be double checking, of course. But that is interesting. Part of that too is so when you buy an investment property, whether that's a duplex or just a straight investment, is we are going to require like a separate part of the appraisal where we're going to look at that rental history and just look at the average rent just to make sure it's going to match as well. So,
and that'll be when you're already under contract. Obviously,
100%.
but it's going into it. You want to know too what you could get renting it. Sometimes there's already a lease in place on a property, in which case you have to honor that lease. So some people wait for it to run out and then they move out, then you close on it. Some people want there to be a lease in place for them to take over, but you couldn't make any changes until that lease expires. So that's something that we want to keep an eye out for too. But you know, again, seeing what you can rent it for, and then looking at your loan estimate, what your mortgage is going to be, and then what does that look like. You know, some people think, you know, investing in real estate, I'm going to buy a home and it's going to cash flow me $2,000 a month. And it's like, probably not, unless you're paying all cash and don't have a mortgage. You know, you want to make money, but it is like a typically long term of, you know, it's growing in value as an asset. And then you are getting money off your money every month, but then keeping in mind the maintenance and those types of things.
It's a good point because, like, if you're just looking like, hey, I'm gonna make $2,000 a month off rent, you're paying a mortgage for $1,900, and then there's probably going to be still expenses on the property. But if you look at it over 10 years, the amount of equity that's been built, especially if you have somebody basically making the mortgage payment.
Exactly.
So,
Exactly. So thinking about all those things, a reason I started a business called Root Down Properties, and it was because I saw people that wanted to purchase investments, and they were like, I like the idea of that, but then I don't know what to do. And I was like, okay, you know, obviously helping out with the real estate side of things, but I have rental properties, I know what to do, so let me also help people with that. So what we do is a la carte services of like, if you just want us to find a tenant.
Yeah.
And then you take it from there.
Yeah.
It's a one-time fee. If you want us to put a lease in place, one-time fee. We do offer monthly management too, but honestly, we really want to encourage people to like, you can do this.
Yeah.
You know, we're here to help. I mean, the old Rhea probably would have done it all for free, but getting better at monetizing my knowledge. So, you know, obviously we charge for some of those things, and you know, when you have a rental property, you have to provide a certificate of rent paid to your tenants every year. So all these little things, renewing your rental license, just things to be prepared for. But having someone and a team that can help you, you know, keep you on track and make sure that you're doing the right things is super important.
Yeah, huge. Yeah, because I don't own any investment properties. My wife and I have talked about it, but I never would even think of like the certification of rent paid for the year. Of course, makes sense. Yeah.
And they're not hard to do, you know, but it's just one of those things that you got to put it on your to-do list and remember that it's part of it. Legally, you have to send that to your tenant, and but other than that, you know, I really enjoy it. So the first house that I bought it from my aunt, lived in it, thought I'd live in it a little bit longer. Then I met my husband, and he kind of moved in, and then we decided we needed a bigger house. So we bought a house half a mile away from that one, and then have been renting that Xerxes house now for, gosh, like 7 years. Yeah. And when we first were renting it, I think we were renting it for $1,750. Okay. And my costs were like, and that's mortgage, property taxes, and insurance. Yep. Insurance is typically a little bit higher on a rental. Property taxes, you don't homestead it, so I mean a little bit higher too, but not always. Yep. But the cost back then probably $1,200 a month, and was renting it for $1,750. Killer. Now over time, you know, I'm paying down that loan this whole time. I've gotten a deal on my insurance now because I combined the two properties into one policy, so save money there. Now we rent it for $1,930, and you know my stuff is pretty much the same. So, and the house, the value of the home has gone up significantly as well. So that kind of leads to another point. You can borrow against like a rental home, like an investment property like that, to get that down payment to put it towards the next one if you want. So that kind of the house hack kind of looking at it way too. Yeah. And then it's just a mortgage point. Another way of house hacking is like what you did on accident or with your husband is buying the first house as your primary residence. You typically need to have an expectation of living in it for about a year, and then you can get another one and another one and another one. As you can kind of keep doing that, it's a way of doing like a lower down payment and still getting the interest rate of a primary residence. Mm-hmm. So we bought the second one also knowing that's going to be a rental too. So good enough, you know, space for now, but not a long-term home that we'd be in. But that one was built in like 2015. So like poured concrete. You know, the other one is built in 1911. So that one, you know, I put some money into it. Yeah. And so this one then too, we got it at a super low interest rate during COVID. Yeah. And that one monthly I think is about $1,500 all in right now, and we rent that for $2,150. And both of those properties we could rent for more, but we have had tenants in there that we like. They do a great job of maintaining the property. They pay all the bills on time, and that means more to us than increasing rent on someone. Yeah. So I mean, I tell people too all the time, it's worth waiting for the right tenant. Mm-hmm. It's easier to take a loss for a month waiting for a good applicant. Yeah. And rather than just filling the house with someone who's going to pay rent right away and then having to kick them out because maybe they don't actually qualify. And depending on where the property is too, there's different criteria. Like in Minneapolis, you can't say you're like a minimum credit score. Oh, really? As a criteria, so they just changed that. So things like that in other cities, they do allow that, but you can still say, you know, you have to make income at least 2-3 times the rent or whatever you're comfortable with, but definitely getting a screening of background check. You can still get a credit report as part of the screening, so you can see all the debts that they pay every month.
Sure.
Verify their employment, kind of do the math of like, can you afford this house?
Mm-hmm.
People hear so many horror stories about like evictions.
Yeah, well, that would,
I mean, you hear one and people are like, oh, I would never do that, I would never do that.
Yep.
They're rare. I mean, people want to pay their rent. They want a place to live that's comfortable, and they don't want to get kicked out. Obviously, stuff happens and people lose their jobs and those types of things. But, you know, it's just part of it too. Part of the risk. But just having some savings in place in a worst case scenario situation. Yeah.
And that's, and that kind of brings up, didn't even think, kind of skipped my mind. Doesn't happen too often. So you do need to show typically like 6 months of reserves for the interest, for the payment, for the mortgage payment for an investment property too. Something set aside as well. So a little bit of guidance from there. But and I was thinking like, as you're saying, like, oh my goodness, so you're doing like a background check or credit check, you're double checking work verifications, all that kind of stuff. So that would be like where your property management company would be amazing. Like, I know how to run credit checks, but I don't know how to get like a credit check outside of the mortgage industry for somebody else.
Yeah.
So, all those little things. So, absolutely.
Yeah. And there's, you know, contacting a previous landlord is a big thing too.
Oh, sure.
And there's only certain questions you can ask them.
Okay.
Which is like, did they pay their rent on time and would you rent to them again?
Yeah.
Are the two big ones.
Yeah.
And just, you know, listening to kind of their story, and I've heard some stories of, oh, we're moving because our landlord isn't great, and it's kind of like, who's, you know, he said, she said, they said, like, what's what. But, you know, again, it's just making sure that everything checks out for the person, and then going from there. But, I mean, I really enjoy it. I really like being a landlord and having that for people.
Well, and it's like looking at like at having one more asset for your retirement. So if you bought a house when you're investment property when you're 40, and then you keep it for 20 years, and the average home is increasing in value, what, like 4%? 5%?
Yeah, in the
like 5% annually compounding for 20 years. I don't have the calculator for it right now, but on like a $300,000 property, like that is going to be a serious amount of money you're going to have separate that you'll be able to have access to when you retire. So huge, or whenever you need it. Really.
Yeah, I mean the one house right by Theodore Worth that we have, that one I joke to Joe that I'm like, that's our retirement home in the city when we're snowbirds. Like it's 2-car garage, right on, you know, right by the park. Yeah. You know, in the city. Close by to everything we do, and so I joke about that. The other one though, I mean, from when we bought it in 2019, 2020 to now, we've gained 100K in equity.
For just basically maintaining it, taking care of like the renter, just making sure everything's going good, and just
And that's just buying, you know, during COVID, obviously. It was like before COVID-ish.
But even then, we weren't seeing like 20% returns. Like, I mean, during COVID, it was like 10-12%, which was kind of crazy.
It was crazy.
If I'm remembering correct, which is insane, but still like 5% in regular years.
Yeah.
So,
I mean, so now it's like steady, slow growth, but I mean, again, just being able to pull money out of that if we had to. You know, God forbid if we needed some money for something, but the goal is to buy another property this year.
Oh, good.
So,
there you go. Awesome.
But I'm obviously passionate about it. Love to help people get educated about what that all looks like. Obviously, we're talking about just basic stuff. You know, digging into the process more, we would want to meet up and talk more about what that looks like for you and what you're looking for long term. And part of that too is, you know, you do have to pay taxes when you sell. It's not a primary residence, so you don't have any protection there with capital gains. So, you know, that's something you have to keep in mind. And people do things like a 1031, which is where you sell a property take all that and put it in another property, and that's just pushing off paying taxes.
Yes.
I mean, ultimately, you will pay taxes on that at some point, but just again, I'm not a tax expert, but just talking to an accountant too and seeing like, when is it worth it to sell? What will I have to pay on it? But I mean, that's part of investing anyway. I know the same thing is like for stocks. If you take it out, you got to pay what you
100%.
percentage. So
and then you
got to pay to play.
I mean, but it's like you're paying I would assume the taxes on a real estate transaction that is on the profit. It's not on your initial. So just like stocks, it's always on the profit. That's where people don't maybe misunderstand.
Yeah.
But so you're making money. That's the idea. But I mean, investment properties they're popular right now. There's definitely some cool stuff out there, but I mean, I think they may be a little more intimidating for people, at least when we start talking about the financing aspect. But honestly, you can close on an investment property faster than you can close on a single family residential primary residence. So they're actually pretty simple to do.
Yeah.
So cool
just
stuff.
being prepared for it and being educated on it. I think, again, I just like to get it out there and help people realize it is something that you can do.
Yeah, and having a conversation with you, like where you're experienced, you understand stuff, like just talking about this kind of stuff, even if you're just thinking about doing it, and just sitting down with Rhea and just going like, hey, this is kind of maybe my plan a year out, 2 years out, 3 years out.
Yeah.
And just going like, what does this look like? How does this kind of stuff work? Like, you do that. That's the idea here, guys. Like,
conversations are free.
Yes, exactly. So that's the idea. It's like, you don't always have to be like 100% committed to doing it like next week, next month,
For sure.
3 months out. Like,
I mean, even with primary residence, I have people that talk to me that want to do it in 3 years. 5 years. It's like, cool, let's talk now. I don't care. Yeah. Talk to Ben now.
Yeah.
And he can get you on the right track.
Yeah, and I'm usually telling people like, hey, if you're 6 months out, that's when you should talk to the loan officer. Because that's when we can do credit improvement. So for investment properties, if you're like, hey, my credit's like 680, 685, like, shoot, we can get you up 20 points in like 2 weeks. Like, that's very doable. But if you have like a little more time and you're thinking, hey, maybe I'm a year out, like what's the possibility? How does this kind of work on the finance side to get that apprehension out of the way? Mm-hmm. Like, definitely doable. So, absolutely. And conversations are free for me as well. I don't charge up front. Like, it's just, hey, let's figure it out. That's the idea.
Totally.
So,
Should we see if we have any
any
questions or listeners? Let's see. Nope, no questions. Oh, nice. It's 12:22.
Yeah.
Yay.
So a couple minutes. I would say a couple questions that I run across that maybe you guys haven't thought about, because I think with investment properties versus a primary residence, like there's so much more information out there for primary residences. I feel like investment properties, people get confused. Mm-hmm. Are really, we talk to a lot more about that credit part, the down payment requirements. There are some stuff out there where you can put a little bit less down than 20%, but typically in the mortgage industry, the penalties are so stiff for putting that less down, you're really stuck to putting 20% down. That's the big thing. But yeah, what else do I run across? So the one cool product that's really starting to become popular now, program DSCR, but basically we just look at just the rental income. We look at just your credit, just your down payment, and we can close in about a week. So, crazy products. Yeah. So, pretty cool stuff.
Yeah, cool. Well, thanks for hopping on and joining us. Obviously, you can reach out to either of us if you ever have questions about anything real estate or mortgage related.
100%.
Next month, I think we're going to talk about when you buy and sell at the same time. So, I know I always get a lot of questions about that.
Yep.
A lot of financing questions about that. For me, it's more like timeline things, but
we can really get into it. Bridge loans, HELOCs, all kinds of crazy stuff with that stuff.
Yeah. So cool. Well, hope everyone has a great day, and thanks again. And tell your friends.
Yeah. And please post questions if you do have any of those questions so we can respond as well.